Hi guys, this is Shane. So today I'm going to be going over an analysis of SPY for the upcoming week of June 10th. All right. So before we get started, first things first. So this is not investment advice. All right. These are my opinions and ideas. So be sure to do your own research before making any investment decisions. All right. So now that we have that out the way, let's go ahead and get started. All right. So the first thing we want to do is we want to determine the trend. All right. So what you're currently looking at is you are looking at the monthly chart. All right, so we're going to do like a top-down analysis approach. So right now we're currently on the SPY's monthly chart. All right, so what is the trend? All right, what do we know about an uptrend? An uptrend makes higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. And that's how we know we are in an uptrend. So SPY is doing that very thing, right? So SPY is currently in an uptrend. So you can see SPY has been making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. All right. So SPY is in an uptrend. Now, traditionally, right, one thing we can observe on SPY is that every time SPY pulls back and make a dip, those dips have always been bought. All right. So you can see the dip was bought here. All right. Dip was bought here. These dips were bought here. And even if you should zoom out and go way back, you can see that has always been the case. All right. So just to point that out real quick, you can see back in 2002, the dip was bought. We made a dip in 2008 or around 2008, 2009. That was the 2008 crash, or 2008 recession. And there was a dip and the dip was bought. You can see here in 2019, we had a dip, 2018 or somewhere around there, we had a dip, and this was the 2020 COVID dip. All right. So as you can see, history repeats itself in the stock market. All right. So whenever we see SPY pulls back, we should always be asking ourselves, is this a good time to buy the dip? Because the dip is eventually going to be bought and we're going to find ourselves back at all-time highs again. All right. So that's the first thing that we should be thinking about. All right. So the next thing we want to look at is what is our bias going to be going into next week. All right. What's our bias? All right. So our bias is what we're expecting that SPY might do. All right. Is it going to be bullish or bearish going into next week? All right. So in order to determine what we think could happen, all right, let's drop down to the daily chart. All right, so you can see we are on the daily chart. And I'm also going to pull up the RSI right here. All right. Make sure you can see this. So we have the SPY's daily chart and we have the RSI. All right. So one thing I wanted to point out is that there is a what you call a bearish divergence on SPY. And I'll explain what that is. All right. For those of you who know what a bearish divergence is, you can see. But if you don't know what it is, this is when the price is moving upward, right? The candlesticks, the price action is moving upward, but the RSI is moving downward. All right. So the price is moving upward, the RSI is moving downwards. And that is what you call a bearish divergence. So whenever we see a bearish divergence, it's giving us a hint that there could be a reversal or a pullback. Now, in the case of SPY, it could be just a short-term reversal or just a pullback. All right. So I'm not expecting a huge a huge drop or anything like that. We could get a pullback, and that, like we stated before, those dips might just be bought, and by the end of the week, we could be back at all-time highs again. All right, but going into next week, we could possibly see some signs of pullback because of this bearish divergence. So that's a possibility. All right. So next thing we want to see is, are there any bearish setups to support this bias? All right, so just because we see a bearish divergence doesn't mean that we just go ahead and jump into puts. We want to see, are there anything else in the charts that could support a minor pullback before moving higher? All right, so let's go ahead and get rid of that. All right, so in order to see if there are any bearish setups to support this bias, let's go down to the 1 hour chart. All right, so as you can see, it's good to flip, and go between different time frames. Look at all your time frames. All right, so let's see what's going on here. If we bring the RSI back, even on this time frame, you can see it also had bearish divergence. All right. No, I prefer to use this idea on the daily chart. So most of the time, I'm really only looking at it on the daily chart, but just so you can see, it's also here on the 1 hour chart. So you can see, just so you can see what I'm saying, if we should take the price back to this point, right? You can see on this time frame, we had a divergence. And what followed the divergence was a drop. All right. So you can see how we had a divergence and then the price sold off. So what I was saying is, on the daily chart, we have a bearish divergence. So we could see some kind of pullback before moving higher. All right. So hopefully that makes sense. All right. So let's see, do we have any bearish setups here that could help, that could support price moving lower, that could support or bias of the price moving lower? All right. So right here, what we can see is we have some highs right here. Okay. So as SPY was trending, we have some highs here, and you can see the price kept rejecting from this area here. All right. And then you can see it broke above it, but it never closed above it. So that is what you would call like a fake out. Went back above it, never closed above it. Went back above it, never closed above it, until it started selling off right here. All right. So this is what you can call like a liquidity sweep. All right. So price swept liquidity from these highs and then sold off. Other people might just call this a fake out. All right. So price went up to trap the bulls. All right. Trap people who wants to go long, and then it's sold off. So usually in a scenario like this, if you see a weak retracement back to this level, then this could be a bearish setup to go short. Why? The reason is because usually, what did we say about an uptrend, right? An uptrend make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So in an uptrend, usually when the price retraces back to the previous highs, if it's a strong uptrend, we would like to see the price hold the previous highs. All right. So we have a previous high here. If it's a strong uptrend, we would like to see the price hold these previous highs to move lower. All right. I'm sorry, to move higher. But in the event that the price loses this previous high, all right, what could happen sometimes is, if you have a weak retracement, then the price will reject from this area. All right. So does that make sense? Hopefully that makes sense. All right. So you can see this also is what some people will call a head and shoulder pattern. All right. So you can see you would have your left shoulder, you would have your head, and then you would have like your right shoulder. And then, the price can sell off from there. And then you would have like a neckline. The neckline could be, hold on. Your neckline could be somewhere here, like this area here. And then once the price breaks the neckline, you retest the neckline and go lower. All right, so that's one way how you could look at this price action here. Okay, so this could be like your left shoulder, your head, and possibly it could come up to form your right shoulder and give us a move lower. All right, so that's a possible bearish setup that could support our bias of the price moving lower going into next week. And like we said, whenever SPY sells off, historically, those dips have always been bought. So if we do get a sell-off, expect that those dips are going to be bought. All right. So let me just go ahead and just clean this up, just so our chart doesn't start looking too crazy. All right. So that's what we have here. All right. So we have a fake out here. You could call it a liquidity sweep, a fake out. And then if we're looking for the price to come back up into this area, and if we get a weak retest, then we could possibly get a rejection from here to move lower from there. All right. So that's one thing that we can do. Now, the next thing we want to do is we want to, well, before I even move on to the next thing, let's make this the next thing. All right. The next thing we want to do is whenever the price comes to this area, since we're on the 1 hour chart, what you want to do is you want to wait for some kind of confirmation. You want to get some kind of confirmation that's gonna confirm that your idea is correct, or confirm that your idea is more likely to go in your favor. All right. So one way how you can get your confirmation is you would drop down to your lower time frames. All right. So for example, you can go down to your 15-minute time frame or your 5-minute time frame, and you can look for what's called a market structure shift to the downside. All right. So a market structure shift, for example, let's give an example of what would be a market structure shift. So let's say the price is moving up. Let's say this is a supply zone. All right. Let's say this is a level, right? So price is coming up into the level. And once we get up into the level and price comes down and take out these previous lows here, the moment that that happens, then that's a shift in the market structure. All right. The moment we come and take out this low here and take out this range, we have a shift. All right. So the moment we get below this range, then we have a shift or a break of structure. This is called a market structure shift or a break of structure or a change in character. So there are different terms that people use to describe this idea. So the moment we get below this area, we have a break of structure, and this confirms that there could be more downward movement. So the price could come up and retest these lows, or sometimes it might even go up a little bit higher and start to move lower. So either the price will come and retest these lows here and move higher, or if you get your fib and you throw your fib on this range here, the price could move all the way up into the golden pocket. And what's the golden pocket? That's your 61.80% fib level. All right. So these are different scenarios. All right. Or if you have what's called an order block here, somewhere around this area here. Let's make this red. Sometimes you might have what's called an order block, and the price could move all the way up into the order block and reject from that level as well. All right, so you can see once you have a market structure shift, the price could reject from these lows here, or it could push up into the golden pocket, or it could even go all the way up into the order block, and you can get your move down from there. So in a case like this, you might need to put your stop somewhere above these levels. So let's make this red, right? So this would be your stop loss. Okay. So this is what a market structure shift or a break of structure or a change in character. This is what it looks like. This is what it is. All right. So if you put your stop up here, we know price could go anywhere within this area. That's why it's important to put your stop up here and make sure that you're sized for drawdown. So if you should enter the trade here and it goes against you, you want to make sure that your size is not too big so you get shaken out the trade. All right, you got to make sure that your position is sized appropriately. All right, so with that being said, if we come back over here, like we said, you could look for a weak retest here, or even if the price goes higher, if your stop is up above this level here, then you should still be good, right? So the price could possibly even push up into this range here, and you could still get a reject. All right, you could throw your fib level on this range here. And if the price comes up into the golden pocket, the price could also reject from that level. All right, so there are different possibilities here. All right, you could reject from the level, we could push up into here, we could push up a little bit higher and reject from there. But ideally, the ideal situation would be to move up into this level and to reject from there. So we've seen this kind of thing happen on SPY before, right? So you can see over here, we had these highs here. Can you see that? And then what happened? You can see we had a fake out. So price went up above it. And usually what you would expect to happen is you would expect the price to come down and to hold this level and to keep moving higher, right? But that did not happen. We lost the level and we kept moving lower. So this is what you call a fake out, or you might call this a liquidity sweep. All right. And then you can see the price came back, retested the level, and then we had a move lower. And then we had a quick retest right here. All right. Right here. You can see the price came down. We had a quick retest and then we rejected from the level. And then we also had another retest. The price worked its way back up to the level. And you can see we just sold off from there as well. All right. So we've seen this idea played out here. So there's a similar type of setup. So it's a bearish setup, a similar type of setup that's happening here. So we could possibly see a sell-off again if the price comes back up into this level. Also, we've seen the same type of stuff over here. This is SPY again, right? You can see we have these highs here. Okay. And you can see the price came up. Price came up. And you would expect that when we take out this level, you would expect the price to hold the level and to move higher. But that did not happen, right? Instead of holding the level, price went up, came down, and just went lower. So this is what you'd call a fake out or a liquidity sweep. All right. And then you can see the price moved back up to the level and rejected from there. All right. So hopefully you can see that where the price is currently at, we have a similar type of thing happening here. So I'm just looking at this based on what SPY has done in the past. So the last 2 times we saw a setup like this, when the price retraced back to the level here, we got a sell-off. All right. So that could be a setup that would confirm or divergence, okay, that we've seen on the daily chart. All right. And like we said before, when the price comes into the level, you would just drop down to like a 15-minute or a 5-minute chart and look for a break of structure. And then once you get your confirmation, that's when you can take your entry for puts. All right. So once we've done that, what will be the next step? All right. The next thing that we want to look for is we want to look at areas of interest to buy the dip. All right. So if this scenario should play out, right, and we get a pullback on SPY, you have to always be thinking about where would be a good spot, right, to buy the dip. Because as we've seen, SPY, whenever it pulls back, those dips usually get bought up. So where should we be looking to buy the dip on SPY? All right, so let's go ahead and just clean up the chart real quick. Let's delete these things here. And let's talk about our next point. All right, so what we're going to use to determine those areas of interest, or you can call it areas of value, or points of interest. All right, so there are different names for this, and these are those different areas that we can look to buy the dips. All right, so these are going to be important areas on the chart. All right, so the things we're going to use to determine these areas are, we're going to use trend lines, we're going to use moving averages, and we're going to use supply and demand zones. All right, so one more time, trend lines, moving averages, and supply and demand zones. So let's go ahead and let's go back to the daily chart here. All right, so let's start with trend lines. All right, let's start with trend lines. Let's see on the daily chart, do we have a trend line that could create an area of interest? So you could look here. Let's make this black. You can see that SPY is holding this trend line right here. So all I'm doing is just connecting the pivot points to draw my trend line. So you can see SPY is on an uptrend, and whenever it came down to this area and bounced off the trend line, bounced off the trend line, bounce. Every time we come to the trend line, we get a bounce. All right, so if the price should pull back to the trend line, that could be an area of interest or an area of value or a point of interest, whatever you like to call it. All right, so the price comes down somewhere here to this trend line, then that could be an area that could send the price higher. That could be an area where the dip could be bought. All right, so that would be an important area on the chart. All right, so that's one thing. Another thing we can look at are moving averages. All right, so let's go ahead and I'm going to use the 21-day simple moving average. So this is what you're looking at here. You're looking at the 21-day moving average. This is the simple moving average. All right, so let's see how SPY reacts to the moving average historically. All right, so you can see over here we have an uptrend, right? When SPY was trending upward, you can see every time it came to this moving average, it bounced off of it. It came down to it, bounced off of it. Came down, bounced off of it. Came down, bounced off of it. All right, came down to it, bounced off of it. And then finally we had a pullback here. So we lost it, rejected from it, and then once we get back above it, now you can see we bounced off of it again, and now we're up here. So based on what SPY has done historically, we know that if it comes back down to this 21-day moving average, there's a good chance that we could see a bounce from here. All right, so hopefully that makes sense. All right, cool. So also, even if we should go back here, you can see this was another SPY was trending right here. Okay, and you can see even back here, we came up, bounced from here. No, it went below it a little bit, but then it came here, bounced from the 21-day moving average, bounced from here, and then it went into a downtrend. All right, and we see the same thing here, as we already went over that one. All right, so this is something that SPY likes to do. It likes to bounce off this 21-day moving average whenever it's trending. And sometimes it will go below it a little bit, like here, it went below it, but you'll notice that it never closed below it. Okay, you see these, it just wicked and never closed below it. All right. And there are other times it will bounce right off of it, like here. Okay, it just bounced right off of it. Here, it just bounced right off of it. But here, it dipped below it a little bit, and then it bounced. Here, dipped below it a little bit, and then it bounced. All right, and you can see the same type of thing over here. So if SPY comes down to this moving average, it could bounce right off of it, or it could dip below it just a little bit, and then bounce from there. All right, so hopefully this makes sense. So if this is making sense to you, then go ahead and hit the thumbs up button. All right, give me a like and type in the comment section and say this makes sense, just so I can know that you guys are getting it and that it's making sense to you. All right. All right. So we've seen the trend line that could create an area of interest. And we've seen the 21-day moving average that could also create an area of interest where the dips could possibly be bought and SPY to send it back to all-time highs or to send it higher or to get a bounce from those areas. All right. All right, cool. So let's go ahead and clean up the chart again, remove those things. Let's take this off. All right. So what would be our next steps from here? Let's drop down to, okay, yeah. So we said trend line moving averages and also supply and demand zones. All right, so that's another thing that we can use. We can use supply and demand zones to also find our areas of interest or areas of value and so forth. All right, now our supply and demand zone, the way how we're going to approach it is it's going to be based on pivot points or turning points. All right. So if you remember our example of uptrend, because we saw that SPY's in an uptrend, right? If we see our uptrend, uptrends are made up of pivot points, right? So where are the pivot points? This is a pivot point right here. This is a pivot point right here. All right. This is a pivot point right here. Okay. So you can see uptrends are made up of pivot points. And an uptrend is not going to be possible without pivot points. Now, all right, pivot points. Now, in an uptrend, whenever the price pulls back, let me just make this brief. Whenever the price pulls back to these pivot points, typically we would like to see the price hold these levels. Okay. And you can see here, if this is a pivot point, whenever the price moves back to this level, all right, in a nice uptrend, you like to see the price hold those levels. You can see we have a pivot point here, right? So whenever the price pulls back into these pivot points, you like to see the price hold those levels and move higher. Now, sometimes the price could go, it could go lower, right? Let's take this one, for example, the price could go lower. All right. Sometimes it will go a little bit lower and you still, and then even if we lose this level, sometimes you can still get a move up from there. All right. But just to keep things simple, this is what an uptrend, this is how we like to see an uptrend. All right. So therefore, we're going to look at SPY and we're going to determine where are those pivot points where the price could possibly bounce off of to create a demand zone. So this is how you can draw your demand zones using those pivot points. All right, so let's go ahead and get rid of those. Now let's drop down to our 4-hour chart because this is going to help us to see these pivot points just a little bit better. Now, there's a lot of pivot points that we can draw, right? You can see if we should take this last leg here, or as a matter of, yeah, let's do that. You can see Price moved up and pivoted down. Price moved up and pivoted down and pivoted up. So these are pivot points. We even have minor pivot points like here, minor pivot points here, minor pivot points here, and then we pivoted. You know what I mean? This would be like a major pivot point from here to here, right? And then we pivoted it up from here. So you have major and minor pivot points. All right, let me just go over that one more time. So let's just draw the major pivot points, okay? The major ones would be like here to here, pivot up to here, down to here, then pivot all the way up to here, then pivot all the way down to here, then pivot all the way up to here. Those would be the major pivot points on this 4-hour chart. Now there are minor pivots in between, okay? For example, we came up here, we pivot here, that was a minor pivot point. We got minor little pivot points in here, lots of minor little pivot points, okay? So you can see we have major and minor pivot points. All right, cool. So what we're gonna do is we could go ahead and draw all these pivot points like this, right? We could do all that if we wanted to draw these out. Those are some of the major ones. We could draw the minor ones, right? Or we could just draw the major ones. But if we did that, this is what we would have, right? Just drawing some of these pivot points. We even have this little one here. Okay, but what we're gonna do is, let me delete those and talk about what we're gonna do. All right, so since the price is all the way up here, 533, and these pivot points are so far away, we're not gonna be concerning ourselves with these right now because it's so far away from the price. So what are the likelihood that, how likely is it that SPY is gonna come all the way down here on Monday? Now it could get there, anything could happen, but it would probably take some more time to get here. So we're not going to concern ourselves with these pivot points that are so far away. We want to focus on the ones that are closer to where the price is currently trading at. All right, cool. So let's pick out some of these pivot points. All right. So if we look, you can see we have pivot point here. Let's observe. All right. So this is like a demand zone right now. So you can see price came up, pivoted down from here, pivoted down. We had the fake out. Then we went back to the level and rejected. That was a bearish setup right there. All right. And then we came up and then we went up above the level and this resistance became support. And you can see when the price came down into this level, we bounced up out of there. All right. You can see this is demand, as you can see here. As soon as the price came down into it, we bounced up out of there. All right, cool. So where else do we have pivot points that are close by? So we're going to include some of the minor ones as well, okay? So another one would be here. So these would be like the closest pivot point areas. All right, so you can see price came up, pivoted down, and pivoted up, pivoted down into here and held the level and pivoted up. Okay, so what that means is if we do get a move lower, the price could possibly come down into this area here and we could get a move up out of there. So we're drawing these pivot points and these can end up being used as supply and demand zones. All right, so if we wanted to draw another one, let's see, here's one here. So these are some of the minor pivot points and just take note, just notice how the price is reacting with these pivot points, right? For example, we came down here, came up and look when the price came to this level here, it held the level and we had a nice reaction and we moved up from there, right at the level. We had a fake out here first, price reclaimed the level, came back to the to the level and moved up from there. And you can even see this action right here. As soon as we touched it, we had a strong move up, and we just kept moving up from there. Okay, so you can see how powerful these pivot points are. All right, cool. So this would be some of the closest levels. All right, because as we know, in the grand scheme of things, on the higher time frames, overall SPY is very bullish. So we put in a bearish divergence on the daily, which means that there could possibly we could possibly see some pullbacks. All right, and we saw bearish setups on the 1 hour time frame. Let's go down to the 1 hour time frame. Remember what we talked about before? We saw bearish setups here. Let's just look at this one more time. All right. So this would be like a supply zone. Price comes back up into this level. And notice these are also based on pivot points. Pivoted down, pivoted down, pivoted down. Broke above it for a fake out or a liquidity sweep, it came down. And if we get a weak retest back up into this level, we could probably reject from there. And then once the price comes down into one of these levels, we could move up. All right. Or if the price decides that it wants to go lower into one of these levels here, we could move up from there. All right. So that's our bearish setup. That could send us down into one of these levels that are close by. All right. Now, what we're gonna do now that we drop down to the 1 hour time frame is we're just gonna narrow down these demand zones, just make them a little bit smaller. They're a little bit too big, right? So we're just gonna narrow it down like that. Okay. You can do something like that. Yeah. So you can see every time the price came to this level, we rejected from the level, rejected, rejected, rejected. We had our fake out or liquidity sweep, and we came back, reject, came back, and reject. So that was a bearish setup. All right. Now you can see as soon as the price came back to this level here, it was demand. And it was based on those pivot points. That was strong demand that just sent the price higher. So if the price comes back to this level, it could possibly hold this level. All right. Or if the price comes lower into one of these levels, we could hold the level. So let's narrow this one down. It's a little bit too big, so we're going to make it smaller. I'm going to do something like this. All right, we can do something like that. We can do something like that. So you can see when the price comes up to the level, we reject from the level. All right, price comes up to the level, we reject from the level, reject from the level, break above it, came back to retest the level, and then we moved up from there. All right, so you can see how powerful these pivot points are. Look, so as soon as the price came back to this level, right, came back here, and this candle also came back to the level, and you can see we had nice bullish reactions from here because it is now a demand zone. So, now if we do get a pullback, all right, if price comes here, you drop to our lower time frames, look for a market structure shift to the downside. And then if the price comes to this level here, what we can do is we could go to our lower time frames again. So your 15-minute or your 5-minute time frame, or we can look for a break of structure, but this time to the upside. And once we get that confirmation, then we can get in calls to buy the dip here. Or if we lose this level, right, then the price could possibly come to the next demand zone, which would be down here. All right. And then once we get here, we can drop down to lower time frames, see if we get a market structure shift or a break of structure or change in character on the 5-minute time frame. All right. And if we get that confirmation on the lower time frames, then we can look to buy the dip from this area to move up higher from here. And then the price can go back up to here. And if we can reclaim this level, then maybe we can move back up to this level. And then if we can reclaim this level, then we can probably keep moving higher. from there. All right. If for some reason we lose this level here, then, we can go much lower from there. All right. Cool. Cool, cool, cool. So let's see if we have any confluences with any of these levels, right? So let's go back to the daily chart. All right. Let's go back to the daily chart. Let's pull up our moving average. All right. The 21-day moving average. And you can see it's right around in the same area as this level right here. All right. Let's go to the 4-hour. You can see, well, hold on. Let's go back to the daily real quick. You can see here, this is where our moving average is on the daily. Let's take that off. And now let's drop to the 4-hour. And you can see this is where we draw our pivot point on the 4-hour chart. So you can see it's right within the same area. All right. So if you remember, every time the price came to, every time usually historically on SPY, whenever it start trending, right? Whenever the price pulls back to the 21-day simple moving average, a lot of times we will get a bounce from there and the price will keep moving higher from there. And you can see it's right in confluence in the same area with this pivot point here, even if you drop down to the 1-hour time frame. So I'm just skipping through different time frames just so we can see it a little bit better. All right. So you can see this is where that daily 21-day simple moving average, this is where it's at, in the same area where this level is at. So if the price comes here, this could be a good level where the dip could be bought. All right. So yeah. So this is what I have for you today. All right. This is what I have for you guys today. Hopefully this was valuable to you. So if you found value in this information, go ahead and hit the like button. And if you have not subscribed, go ahead and subscribe for more. All right. So just to reiterate, we figured out the trend, and we saw that the trend is bullish on the higher time frames. And then we figured out our bias going into next week. All right, we saw that we had a divergence on the daily chart. All right, and then the divergence suggests that there could be some kind of minor pullback going into next week. All right, and then we dropped down to a lower time frame on the 1-hour time frame to see if there were any bearish setups that could help to confirm that the divergence could play out. And we saw on the 1-hour time frame that we had a bearish setup. All right. And then if we should get that pullback going into next week, we have our areas of interest or areas of value or points of interest, where the dips could be bought, different areas where the dips could possibly be bought. All right. So, happy trading and trade safely. Until next time.